Well, good evening, everybody. I want to welcome everybody to our Wealth Max call here tonight. As I said, for those that are just logging on, grab a pad of paper and a pen. You're going to want to definitely take some notes here tonight. We've got a lot of great information to share with you, as always on these calls. And, of course, we've got several guest speakers, and I'm going to go ahead and turn the floor over to Brian House, who leads the charge here with the Financial Edge Services. There's none better than him, a 25-year veteran in the financial world and the network marketing world, and so we're excited to have him share tonight. And I know, Brian, you've got some guests here as well, so I'll let you introduce them. So I'm going to go ahead and turn the floor over to you, sir.
All right. Hey, Paul, thank you so much for the introduction. I greatly appreciate that. And, guys, listen, I greatly appreciate you all taking the time to get on here tonight to learn a little bit more about our private reserve account. And that's what the focus of this call is going to be tonight. We've let Jordan Goodman take the night off. Most of you know that we're on our last call with Jordan Goodman. We did a lot of talking about insurance and IULs and different ways that people can save money. So tonight, we wanted to provide you with some detailed information because we've been getting a lot of questions about our private reserve account. We've had a lot of people that have already scheduled consultations to access the private reserve account. So we wanted to make sure you guys had the details that you needed. And we've got a great guest that is the VP of Corporate Development with CalChoice, our partner company that provides our private reserve account for our members. So, but before we get to our guest and have him kind of fill in the blanks and give you guys the details on the power of having a private reserve account, I want to talk to you a little bit about what leads up to getting a private reserve account. Most of you that are already involved with MWR Financial, you know that the purpose of our program is to help you do better financially, whether it's increasing your credit scores or helping you eliminate your debts or reducing your tax liability, providing you with great investment or savings advice, and also providing you with the ability to be able to increase your income. All of those things are great. But one of the things that we need to focus on is to help you understand what to do with the money you have through the cash flow that maybe we've helped you create through our services, and also the additional revenue or the additional income that you're bringing in from the opportunity that MWR Financial provides. Guys, that additional cash flow that we're helping you create, I want you to stop thinking about that extra money as spendable income, okay? I want you to start thinking about that extra revenue as savable income, okay? Because that's exactly how wealthy people think, guys, and this is our Wealth Max call, so we want to give you the secrets of the wealthy. We want you to start thinking like wealthy people think. We want you to start thinking about how you can start saving and investing and living off your interest instead of off your earned income. That's the purpose of this entire program, is to provide you with knowledge, but also to provide you with the tools and services that it takes in order to make that happen. Now, the same thing applies with our income opportunity. There's some of you on this line that have your cars being paid for by MWR Financial. There's some of you that are making thousands and thousands of dollars every single month. And for most of you, that's probably additional income over and above whatever you have with your existing business or maybe your existing job before you got involved with MWR Financial. So this is additional revenue. And when I start explaining to you the difference between spendable and savable income, I want you to realize how most people think. Not wealthy people, but how the average consumer thinks. This week there was an article that came out by CNBC that said that the percentage of people in this country living paycheck to paycheck just rose from 75% to 78%. That means 78% of the American population, working population, is now living paycheck to paycheck. And the large majority of that percentage of people has resigned themselves to the thought that they are never going to be able to retire. They're literally going to have to work until the day that they die because they don't see how it's possible. And so tonight, you're going to learn how it's possible because you're going to learn how to transition your thinking or change your mindset from spendable income to savable income, and how you can start putting money away for retirement and have an alternative retirement solution, an alternative banking solution with no risk of loss, tax-free, is considered to be the best way to save, grow, and protect your money. And guys, this is something wealthy people have been doing for decades, and we want to be able to share that information with you tonight. So I'm going to bring on our guest speaker, and once he's done talking, I'm going to explain to you another scenario, because there's some things that are involved with our private reserve account that open up some additional industries for you, some people that you can talk to that are going to be interested in being able to participate in this program, to market this program, that can also benefit from it because maybe they are licensed insurance agents. And so I want you to be thinking about that. But before we get into all that, I want you to get to the details on our private reserve account. I want you to hear how powerful this thing is compared to any other savings model that I've ever seen. And guys, I've been in the financial services, financial solutions industry for over 26 years now, and this is, without a doubt, the best way that I've ever seen for people to be able to save, grow, and protect their money, tax-free with no risk of loss. So with that, I'm going to bring on our special guest. And tonight it's an extreme privilege getting to know this gentleman very well, since we partnered with their company at CalChoice and MWR Financial working together now. This guy knows everything you need to know about this private reserve account. And with all the questions we've had coming in, I wanted to make sure that you got it firsthand. So the gentleman I'm going to bring on is Mr. Rob Hodges. Mr. Hodges, as I said, is the VP of Corporate Development for CalChoice. He is involved in the process of how this program works. And so he's going to give you the details tonight, and I want you to grab a pen, grab a piece of paper, definitely take some notes. You're going to want to have this information available to you because, one, you're going to want to use it. But the other thing is you're going to want to share it with other people. And so I'm going to bring on my good friend, Mr. Rob Hodges. Rob, are you on the line, buddy?
I'm here. Thank you very much for that intro. Fantastic to be here. Excited to talk to you guys tonight.
All right. Well, Rob, listen, the call is yours. I greatly appreciate you taking the time tonight. I'm grabbing a pen and a piece of paper, so I'm going to sit back and take some notes as well because I can't ever seem to learn enough about this product. So feel free to share what you want to share, and if you need me, just call on me. I'll be right here waiting.
Perfect. So we'll jump right in. I appreciate, again, having the opportunity to speak with everybody here at MWR Financial and the partnership that you have with CalChoice and the PRA. We're going to hit on some things this evening that some of you may have heard in a couple of our presentations that we've kind of put together for you guys to show your folks. But I more importantly kind of want to give a backdrop to why the private reserve account was created and talk a little bit about the messaging that Americans get today from the financial services industry. Now, we know the financial services industry has been around for a couple hundred years. We see them on TV. We see them on halftime shows. We see them in the newspaper, on the radio, on the Internet. Financial services companies are everywhere, and they've got messaging that's everywhere, from put money in your 401k and grow dollars tax deferred to refinancing your 30-year mortgage to a 15-year mortgage and paying your home off sooner, to, put your money in the bank. That's where it's safe. Or you got to have a fee-based registered investment advisor, or annuities are the only way to go. We have so much information coming at us at a daily basis that it's almost information overload. In fact, it's not almost, it is information overload. And my experience in 29 years in this business is the vast majority of people don't read anything. They just go where the flow is. They'll talk to their coworker. Hey, what are you doing with your 401k? Oh, I'm just putting my investments over here. Okay, that sounds good to me. And they put it there, and they never fully understand what they're doing, how their investments, if they have any at all, are growing, the effect of taxes long term, the effect of inflation on our money, and really what it has to do to grow to where we can retire at some point at a very successful position. And I believe that the vast majority of Americans make enough money It's just the vast majority of Americans don't make the right choices, and we've kind of already done a little lead into that. But let's talk about where most people put their day-to-day money, and that's simply putting it in the bank. And we understand how banks work. We understand that we're going to get a very low rate of return when we put our money in the bank. I think most of you on the call tonight know that banks turn around with our money and loan it out to other individuals. They pay us 0.5. They charge 8, 10, 12, 18% with our money. They create what's called arbitrage for themselves. It's a great concept. Most people don't know how to make arbitrage for themselves. We're going to talk about that tonight. We know that if we need to get money from the bank, we need it to buy a house or an automobile, that we've got to qualify to borrow it. And isn't it interesting that when we need it the most, banks typically don't want to loan it to us? That banks only want to loan money to people who don't need it. And that's kind of the pattern over history with banks. It's very difficult to get a loan when you really need it. The bank sets the loan terms on that money, and if we don't follow those loan terms, they come and take whatever it is that we bought with that loan. And our dollar serves one purpose when we put our money in the bank, and that's to make money for the bank. That's the only purpose. So when we talk about the private reserve account and what you all have access to with your company is we show people how to put money in market-linked returns. And simply what that means is we can kind of follow along with what different indexes do, like the S&P 500 as an example. We can participate and get most of the ups with something like the S&P 500 with none of the downs. And we don't have to, and basically what that means is as our money grows, every year we've got a profit. That profit is locked in and we can never lose it again. And I'm going to talk about how that works here as we get going through here. There's no qualifying to borrow money out of your private reserve. It's your money. Simply take it. And the beauty is we can show you how to continue earning interest on that money that you borrowed just like it was still there. There's that arbitrage word again. We're going to show you how to do what banks have been doing for decades, is get arbitrage on your money when you borrow it. Continue to earn interest on it while you're using it for something else. You set the loan terms. Pay it back in a month, a year, 10 years, or in many cases, never pay it back. And we'll talk about some concepts and how that works. We show people how to get their dollar serving multiple purposes. So your partnership, MWR's financial partnership with CalChoice Financial allows you to bring this private reserve account to your clients and show them how to get their dollar serving multiple purposes throughout their lifetime. One of the things that I want to hit on kind of specifically is because this is something that people can kind of grasp and they understand, and that is a traditional car loan. Guys, when we go out and borrow money for an automobile, we find it, we shop for it, we get the loan, and we borrow it from some loaning institution, and we understand we're going to pay that loan for 48, 60, 72 months, whatever it is. But let's say that we borrowed $25,000 to buy a car. And we entered into a 5-year agreement, 60 months, in which we pay $471 a month for the use of that car to retire that loan. We'll pay out $3,260 in interest over that 5-year period of time, and our total cost to purchase that car is about $28,260. Now, at any point in time, if we quit making payments to that institution for that automobile, they'll come and they'll take the car. And so they'll keep the money that we paid, they take our car, and we got to figure out what to do. So, guys, what we show people to do is build money up in their private reserve account. Instead of borrowing that money from a lending institution, take it out of your private reserve account. Continue paying that $471 a month back, just like you would to the lending institution, but you're paying it back to yourself. Retire that loan in 58 months instead of 60. You save $942 in payments, but the beauty is that arbitrage on that money, and we're going to go back and look at, I don't have a graphic here, so just want you to go back, those of you that are maybe in your 40s or 50s that are on the call, you don't have to look back too far to remember 2000, 2001, and 2002. That's when the stock market over that 4-year period of time lost 40, 50% of the money that was in it. But in that period of time, 2000 through 2004, arguably the worst 5-year period in history, that $25,000 that you used to buy your car earned $3,100 in interest while you were using it. And in both scenarios, you've got the car paid off after 5 years. Guys, that's a $4,000 difference simply by approaching it a different way. And I'm going to submit to you, approaching it the way the wealthy people have been doing it for years. Guys, wealthy people traditionally don't borrow money from the bank. Wealthy people have things like the private reserve account where they can use for their own alternative banking system. Now, if we took a more favorable period of time, as an example, 2010 through 2014, and we did exactly the same thing, took money out of our private reserve account to buy the car, paid the $471 a month to pay the loan back to the private reserve account, we would have earned $15,000 in interest from 2010 through 2014 while we used the money to buy the car. And in both examples, that loan is paid back. So from a very simple standpoint, this is one example of how we show people to use the private reserve account with their day-to-day purchases, with things like not only buy a car every day, but we buy cars every 5, 6, 7, 8 years. And if we can show people how to make a $3,000 to $15,000 difference in their pocket every time they buy a car, and teach their children to do the same thing and their grandchildren to do the same thing, it doesn't take very long to create a legacy in our families. And I'm a firm believer, if we want to change the world around us, we've got to first change our own household. And that's what I'm proud to say with my family is my 9-year-old son's had a private reserve account since he was about 2 months old. Both my grandchildren have it. Both my adult children have it. My wife and I own it. We've created an alternative banking system within our family that we are not using traditional banking systems for things like purchasing a car. So there's kind of an example of one way that we show people how to do this. But when we talk in terms of the private reserve account, when it's structured and designed the right way, and for those of you that don't know, we do the private reserve account design inside an indexed universal life policy. But we design it very differently than the traditional insurance industry designs it. And when we do it the way we show people how to do it, we have all sorts of other benefits. Yes, as we talked about earlier on this call, the money does grow tax deferred. It's linked to the market. It never has any downside, never lose money as it grows. We take money out tax-free. We can actually put unlimited dollars into a private reserve account. We won't go into great detail tonight on how you do that, but we will hit on how it represents a supplemental retirement account. And guys, I'll tell you, I will stack up a properly designed indexed universal life policy in a private reserve account design against any qualified plan out there, any 401k, any IRA, any Roth IRA, and we'll beat it because there's never any losses, but yet we're still getting access to the growth in the market. There's no early withdrawal penalties. It doesn't work like a 401k or an IRA to where if we pull money out prior to 59 and a half, we get penalized. We can take money out of our private reserve account any time we want to, tax-free, with no penalties. We also have no required mandatory distribution. So what does that mean? The IRAs, 401ks, the tax-qualified retirement accounts that most people put their money in, if they don't need that money, the government forces them to pull it out at age 70 and a half. Now, many of you are on the call going, well, that'd be a great place to be in to where we didn't need that retirement dollars. But just think about it for a second. If you don't need the money, but the government forces you to pull it out or you pay 50% penalty if you don't, that's eliminated with the private reserve account. We can build it for long-term care alternatives, have some unbelievable living benefits for chronic and critical illness. We just talked about the loan alternative and using it to buy the car. We show people how to supplant their 529 programs that people are traditionally saving for college for their children. We can completely turn a 529 upside down with a properly designed private reserve and give that college student more money for college. They continue to earn interest while they're using it for college, and then a supplemental retirement program instead of their 401k. They have more money at every phase than a traditional 529 plan. Let's talk about mortgage acceleration here for a second, because I don't know about you all, but I'm seeing this almost on a daily basis if I'm on the internet. Quicken Loans is talking about refinancing into a 15-year mortgage, and their messages is fantastic. I mean, it's so strong and resounding. That's what's happening all over the lending institution right now. And the concept behind it is refinance your 30-year mortgage to a 15-year mortgage because interest rates are at historical lows. Your payment won't go up a whole bunch. They don't tell you how much, but they say it won't go up a whole bunch, and you can retire your mortgage in 15 years. People are gravitating to 15-year mortgages by the tens of thousands. We show people a better way. We show people how to keep the risk at the bank and grow their equity outside of their home. Those of you that were in the housing market in 2008, 2009, and lost your shirt, many people lost their homes altogether when the housing market declined nationwide. Imagine having your equity not tied to your house, but tied in a private reserve account to where you walked away with every penny of equity that you had in that house and still had the ability to pay it off sooner than 15 years if you wanted to. We show people that strategy, and it's phenomenal. It's 100% better than a 15-year mortgage. We show people how to do it and spend the same money. It's always liquid. You have access to your money at any time. We've already talked about earning interest on the money that you borrow. And guys, if you pass away at any time while your money's in your private reserve account, there's a tax-free death benefit that is greater than the money that you had into the account that goes to your beneficiaries at the time of death. So as we walk through this, let's hit on a couple other concepts really quickly because I think it's important. And again, I want to go back to the messaging that we have in the financial services industry. If you're on the phone tonight and you're a 20-something, a 30-something, or an early 40-something, the messaging that you're getting from everybody in the financial services industry is you need to be aggressive. You need to have the majority of your portfolio in growth-type stocks, or if you're in a 401k, in growth-type mutual funds, international mutual funds. And the concept behind that is you're young enough that if the market has a hiccup, if the market goes into decline over 2, 3, 4 years, that you actually have enough time to make it up. And if you're on the call tonight and you're in your mid-40s to 70s or older, you're being told that you need to slowly be moving your portfolio from the risk investments down to the income-producing investments, but they never talk about what happens with inflation when you go from returns that can give you 8, 10, 12% down to 3, 4, 5%, and how inflation eats away at the overall picture for retirement. Guys, what we show people is how to have market-type returns without any losses. And let's go talk about really quickly what happened as recently as 2000. Now, I was in this business in 2000, and I bought into this messaging. This is what I told all of my clients. I had millions of dollars that was in mutual funds that I was managing at that time. And I had people come to me in 2000. They'd call me and they'd say, Rob, we just lost 10% on our money. What are we supposed to do? We can't afford to lose any money. And the messaging back to them was, guys, now's a great time to buy. The market's down. You need to put more money in there. Every spare change that you have, get it into the market because it's going to come back. 2001, the market lost 12%. Those calls came again. Rob, what do? We lost 10% last year. We lost 12% this year. What are we supposed to do? I said, guys, you need to buy. The market's down. And as you're listening to me tonight, understand that every financial advisor, every mutual fund advisor, every person that's representing 401ks, this is exactly what they're telling people to do. And my clients would say, really? Yeah, guys, that's what you got to do. Well, what happened in 2002 when the market lost over 22%? They quit calling, but they took their money out of those investments and they moved it into the bank. And then they watched the market hit 29% in 2003. They watched the market hit 11% in 2004. It only gained about 5% in 2005. But in 2006, they're still on the sidelines watching the market, and it did 15.74%. Those people all got back in. Do you know why? Because the messaging on the radio, the messaging on the television, on every magazine, on all their coworkers was the market's booming. Oh, this is awesome. They took their money out of the bank. They put it back in the market. They got a decent return of 5.4% in 2007. 2008, the market, the bottom dropped out of the market. They lost 38% of their money. They took it. They parked it. They will never get back in the market again. Guys, that's the real world. When you look at the historical performance of 401ks over the past 20, 30 years, the average rate of return is less than 5% because of what I just talked about, the phenomena of people not being able to stomach that roller coaster ride. So when we show them the private reserve account, they don't have to get all of the ups. They don't have to ever see a 28% rate of return. They don't need a 15% rate of return. They can actually beat the market by simply getting the first 12 to 13% of the gains and never have any losses, and they'll have more money in a tax-free account than they would ever have in their 401k anyway. That's the power of the private reserve account. And when you match that up with the fees associated with 401ks, there's typically 19 to 21 different charges in a mutual fund. People never know what they are. They're hidden fees that we never see, but on average they're 2 to 3%. The cost over the long haul of fees within an indexed universal life policy, a private reserve account designed the way that we're talking about this evening, are a fraction, oftentimes 0.25 or 0.5 basis points, which is a half to a third of what they would pay with a registered investment advisor, and far, far less than they would ever see in a mutual fund. So as we're kind of talking about this tonight, and I'm going to wrap up because, again, conceptually it's hard to hit on a lot of these things here, but I want to revert to one thing that I think many of us have heard, and we know who Warren Buffett is, and I don't know if you know what Warren Buffett's 2 rules to growing money are, and they're very simple. The first rule is never lose money. His second rule is simple, revert to rule number 1. So as you guys are out here listening to this evening, I just want to reiterate and profoundly explain the importance of growing your money in a tax-free environment with unlimited contributions, being able to access it at any time, use it for purchases, continue to earn money on it, and pull your money out tax-free when it makes sense for you at the time that you need it most, and have it designed in a way that your family has tax-free benefits if and when you pass away. So that in a nutshell is kind of a 30,000-foot view that I wanted to talk about tonight, and I will pass it back to you all at MWR.
Rob, listen, thank you so much. That was incredible information. If you have a second, I'm going to hit you with a few questions, if you don't mind. I know you'll be able to answer them, and these are things that people have questioned us about. But one thing is you can talk about the protection of a private reserve account. You know, for people that may have went through some challenges or that may be sued at some point in life, is the money able to be liened or taken out of a private reserve account if somebody goes through those types of situations?
No, the money is not available. You can't sue to get it. It's very liability friendly in the policy. So if that is not a situation you have to worry about.
I love it. I love it. So that provides an extra layer of protection for people with their money.
Absolutely.
Now, the other thing
I want to point this out as well. Money that's growing in a private reserve account falls outside of FAFSA. So those of you that are saving money, or you know people that are saving money in a 529 plan for college for their kids or maybe their grandkids, that money in there counts as income and assets that goes 100% against you when you're trying to qualify for student loans and student aid, whereas money in a private reserve account does not. You can have $100,000 in your private reserve account, and it does not affect your qualification for student loans and or student aid. That is a huge deal. Just another addition there. So back to you. Sorry about that.
No, that's beautiful. You don't have to apologize about any of this information, Rob.
Okay.
The other thing I want people to understand, and I think this is extremely important, is because with our program, and you're familiar with this, I know Andre and the people at CalChoice that we're working with, they understand that our program is designed to help people succeed like a financial expert without having to become a financial expert. And so when you talk about putting all these plans together and how to actually do these different things with your private reserve account, what I wanted to point out very quickly is, guys, that's one of the reasons we partnered with CalChoice. You'll notice, for those of you that are Financial Edge members, that one, there are no setup fees because you're involved with MWR Financial or Financial Edge. You have no consultation fees. It's totally free. The other thing is that if you have questions, you're going to be assigned to an actual agent that will help you walk through the process of what you want to accomplish. But the other thing is, and I think this is extremely important too, Rob, and you can expand on this if you want to, and that is that, guys, they're going to tailor the program the way it works best for you. Okay, now, the reason I mention this is because if you were going to buy a standard IUL, Index Universal Life Policy, the motivation with most agents revolves around commissioning. Okay, and this is not everybody. And so when I make this comment, I know this is going to be out there and people are going to hear this. That doesn't mean all agents are bad. They absolutely aren't. And there are some great agents out there that offer IULs. But the focus of this program, and especially being tied to MWR Financial, is to make sure that the decisions that are made for you are not made based on what pays out the most to the agent. It's what benefits you the most as the consumer. And that's something that motivated us about partnering with CalChoice, is because we've seen the other side of it. We know that there is some of that goes on in the industry, and we wanted to shelter our members from that. And so, Rob, I don't know if you want to expand on that any, but I think it's important for people to know you don't have to be an expert on this. You have the ability to schedule consultations whenever you need them for whatever, maybe you need to know how the arbitrage works, or you need to know how to pull out money or do whatever you need to do with this, and you're going to have access to people that will assist you with this. You're not on your own. So do you have anything you want to add to that, Rob?
Yeah, absolutely. And, I'm going to kind of piggyback on what you just said. I've been in this business 29 years, and I can tell you honestly, I don't think I've met one person in the financial services industry in 29 years that has gotten into the industry to hurt people. They all get in the industry to help people. The problem is the industry is so sales and commission driven that they're never typically taught how products can be designed. And so the difference between, I would say, 99.9% of the agents in the industry and what CalChoice is doing and now partnering with MWR Financial and showing you guys what we do is we drill down and we only market it in ways that best suit the client. And sometimes it takes 2, 3, 4 times as long to design the product when we do it that way. But as a company, that's our commitment to the people that we serve, is the commissions are not the first thing we think about. I mean, obviously the agent gets paid. You can't do it for free, but we design it in a way and we actually show the client what the commissions are, which is not normal in this industry. People never know how much their agent's earning. We sit down and we show them, look, this is how we've designed it. This is what we're going to get paid. If we had designed it the traditional way, we would have made 3 times as much. We're very happy to break that down. But when we're talking about specific needs, I will tell you that a need for a 2-year-old obviously is very different from somebody that's in their 60s. But the fact of the matter is when the PRA is designed specifically for the need for the demographic, we can do virtually anything comparable to what the industry has and make it more tax-friendly, bigger death benefit left behind tax-free to the beneficiaries, more liquid, and always having the ability to never have any downside risk. So there's a myriad of designs that we can do. We touched on just a couple of them this evening. But we sit down and go through the client, kind of do a financial evaluation, if you will, and look at what they're trying to accomplish. And if and when that we will never force the PRA, it has to work. But there's so many strategies in which it can be done that, you know, for as little as $100 a month, in most cases, we can get people going on a private reserve account and get them saving the money the way that we talked about this evening.
Wow. Listen, I can't thank you enough for taking the time to be on here tonight. And I want to throw this out as well. Guys, I know there's going to be additional questions. And if you have questions, feel free to email us. We're not going to do an open Q&A tonight like we normally do. I don't want to tie up Rob for the rest of the night because I know we're all excited about this, and for good reason. But at the same time, if you have general questions, definitely submit them to support@MWRfinancial.com. We'll make sure that gets to the right party so that they can get those questions answered for you. And if you're in a position and you're ready, because I know some of you are, because you've talked to me about this, and you have money in an IRA, or you have money in a 401k, or you have money that has been sitting around in a savings account that's not earning you anything near what you can do here. As a matter of fact, Rob, and I'm going to mention this, and I need to do it compliantly, when we had the information sent to us, we wanted to see what the average returns were for the last 10 years. And with just one scenario, not multiple scenarios, just one scenario that was sent to us, the average returns were over 6% for the last 10 years. Okay, now past performance doesn't equal future results. We have to say that. But there was a period in there to where annually it went over 12%. And so when you look at the returns that you're getting now on your savings, I want you to think about, is that money really making money for you? And I believe with all my heart that this is the best scenario for you to be able to save, grow, and protect your money tax-free with no risk of loss. I firmly believe that, or I wouldn't even be talking to you about it. And that's very important to us because, guys, this isn't just about providing you with a tool that can help you accomplish that goal. We have to have a program that has no risk of loss, because we're in an industry that if we offered a program that had a risk of loss and our members took a loss, we could lose members, you could lose representatives or consultants in your organization because of a negative experience. We want to make sure that experience is always positive when it comes to MWR Financial, and that you're always receiving the best information, not just information, but the best information to help you accomplish your financial goals. And Rob, I think our partnership with Cal Choice was one of the wisest decisions that we've made since we've owned this company. So extremely excited to be working with you. Greatly appreciate your time tonight. I do want to mention, guys, if you enjoyed this information, please go to www.facebook.com/MWR Financial. Where you see this call posted, comment on it, like it, love it, all of those things, because we want to show our appreciation for Rob and the information he shared tonight. And we will definitely have Rob back on future calls, as well as some other gentlemen with Cal Choice that you're going to want to hear from as well. So, Rob, thank you again for being on this call. I greatly appreciate it. I got so much out of it. I know everybody else did too. And again, I can't thank you enough.
Great. Thank you, guys. Have a good evening.